So we're going to talk about the economy. We're going to talk about housing prices, wages, how to get rich in this kind of system, taxes, all sorts of things. And I've got my son here with me.
Hi.
He's behind the camera, and we're going to have just a relaxed dialogue. So we'll go ahead and get with it.
All right. Where do you want to start with?
So I think the first thing that I'd like to talk about is the economy as a whole. People talk about the economy being very strong or being very weak, feeling like their paycheck's very tight. You hear all sorts of different things, and I think one of the reasons is because the economy is not just one thing, right? It's at least three systems kind of working together. One thing you can think about them as is kind of like a dashboard, like the economy. If you drive in the car and there's these different gauges. So those gauges would be production. That's what we usually talk about at a higher level, like for a country level, you talk about that being the gross domestic product, the GDP.
Yeah.
And so there's the GDP gauge, and we want to know how much we're producing. That's all the goods and services, end products that are being made. The next gauge would be income. And there you can look at the national level. There's a gross national income that's not talked about quite as much, but it's just like GDP, but it's specifically all of the income that all of the citizens of our country make collectively. And that can come from wages, or it could come from investments. And the last one is wealth. So that would be how much wealth all the citizens have. But another aspect kind of for income and for wealth that we'll talk about is the distribution of each. So how is that wealth distributed among the population, and how is that income distributed among the population? And those are really critical because we could have high-level metrics for these three that are showing great strength. So you might see the stock market at all-time highs. We might see that our gross domestic product, our productivity for the U.S. is an all-time high. But you may also have workers that are feeling squeezed more than ever. That the housing prices versus their paychecks, it's harder and harder to afford housing. That has more to do with these two gauges, not the total amount, but the distribution of the income and the distribution of the wealth. And so I think those are some of the things that I'd like to talk about. We'll step into each one in a little more depth. And then over time, we'd like to have more of these talks and talk about other topics kind of in the same vein.
Do you think the reason that people think that like houses are way too expensive or like groceries are way too expensive is because wages aren't going up enough to fight inflation? Or do you think there's like also more because at least probably some part of it?
Yeah, so I think we can get more specifically into housing because housing is such a big issue. But high level, and there's a short video that we have out right now that talks about this as well. Housing hasn't actually changed in price in comparison to the national income. So if you look at that first gauge, if we look back at like 1970s, 1980, when we were in kind of the heyday for the middle class and working class, if you look at the ratio of the total income per person, if you break it down per person, then to now, it's approximately the same ratio as the average home price then and the average home price now. Or to say it differently, the income per person then compared to the average home price and the income per person now to the average home price is about the same, and it actually implies that housing is a little bit cheaper now than it was back then, which is kind of mind-blowing. It doesn't sound right at all. Right?
No, it does not.
That was like a time when you could own a home, you get a job out of high school, you could own a home, you could have a family, all on with one income earner, and you can't do that now. So why is it the same ratio? If you drill down into it, what you see is, yes, the total income, like that ratio is the same, but the people that are receiving that income, that's the ratio that's changed. So workers had a larger portion of the income, of the total income, back in the 70s and 80s and 60s and 50s than they do now. And now they have a smaller portion. So it's like they're looking out with this smaller amount of the total income, and they see housing as more expensive. But one reason the housing is the price that it is because investors and like wealth holders, they have more of the money, more of the wealth, and more of the income now. And so to them, housing is cheaper. And so they can buy up houses up to say, approximately the same feel for the income, and it feels the same, or it feels cheaper than it did before, because they have proportionately more of the total pie of income and of wealth. Does that make sense?
Yeah, and do you think this is probably why so many people nowadays, especially like right out of college, they feel like they're trapped in like this renting cycle where they can't get a house because their income is too low, because like you said, the higher ups have the income.
Well, so absolutely, and I think you're personally either experiencing it now or on the cusp of about to experience this.
And I'm hearing about it as well from fellow students.
Yeah, students, and yeah, that makes sense. I think it's absolutely the case. There's just several directions that we could go with that, but the short answer is yes, absolutely. There's less of an ability to start working immediately. You have to get your education, which is more expensive than ever. And even when you're out, your wages are relatively lower now than they would have been then. So across the board. And we're seeing that with other statistics like the average age of a homeowner, of a first-time homeowner. I don't have the statistic right now for what it was in the 70s and 80s, but it's now up to a record high of about 40 years, like 40-year-old. So right around my age is the average age for the first home purchase. You can imagine, another 20 years for you until you get your first home.
I would not want to do that. I have friends that are quite a bit older than me and they're still renting, and I'm like, oh, when are you planning to get a house? And they're like, I have no idea.
Right.
And it seems really difficult.
Well, and imagine if on average workers aren't owning homes, that means that on average investors own more of those homes, and then you're paying a larger portion of your income to rent, because it's the same thing. Either you own that investment or they own that investment, and you're paying them. So it just takes your income that's already smaller, and then a larger portion of it goes to somebody else's investment.
Yeah.
Just a continuously eroding wealth for workers.
Yeah, that's exactly what I was going to say. Like, you're just not gaining any wealth, and it's just all negative.
I'm sure it feels very frustrating.
Oh, yes.
And that's part of why we're talking about stuff, because it's frustrating to see. We'll have to get back on track here in a moment with talking about those pieces, but I'll take a quick moment to mention that as I look back over the last, we'll say, period of time, we're going to talk a lot on this channel about this very special time of like the mid-1940s, right after World War II, to about 1980. It was the golden era for working and middle-class families, and then the period since that time. So we kind of break up what's been happening. In some ways, policy shifted to make those two distinct periods, and we'll talk about why, and there's a lot that goes into that. But as a personal anecdote, I look back over the smaller piece that I've been involved in, born in the 80s, and I can see my grandfather's generation, and my grandfather specifically, his working lifespan, like the period of time that he was working, was really in that golden age. So he kind of started near the beginning and retired near the end. And consequently, he's a great example of someone that owned a small business. He started out with almost nothing, worked his way up, was a worker for a business, and then owned that small business, basically a plumbing business, and then grew that over time, had a phenomenally successful time as, not someone that's like, became a billionaire or something, but someone that became a wealthy, very comfortable, upper middle class person through the course of one lifetime, from no assets to very strong upper middle class. That's the kind of mobility that I think we really want for our society.
Yeah.
That is the American dream.
That's exactly what I was going to say.
And his shot at it, though, was partially through hard work and perseverance, but also because of the era that he lived through that was ideal for people. And we fast forward then, again, this is just the anecdote of my experience. My father then started at the tail end. His work period started at the tail end of that period. So late 70s, he entered the workforce. Because we still had a stronger connection, I think he had a better shot than than say when I graduated. He was able to get out of high school, buy a home with his high school sweetheart, my mother, your grandmother.
Yeah. I've heard about this.
You've heard about them, you know them.
About the home buying, actually, specifically.
But they bought a home at 19.
Yeah.
They were married at 19 and bought a home at 19. Phenomenal. 20 years earlier than the current, average age to buy a home. My dad worked the same, more or less, after a couple of years, I think, of, 18, 19, 20. He worked a couple jobs at a time at that point, but then kind of settled into one position and worked that for his entire career. And this was out of high school, no additional training. So through that, he was able to have a family, buy a home, raise 3 kids. My mom stayed at home. She did some part-time, most of the time, like daycare providing at certain periods, but relatively minor contribution financially.
Bus attendant at some point?
After all the kids were out, she did a little bit of work at that point. And so they made it through that system in a way that wouldn't be possible now, but it's not as strong. Like they didn't have as much upward mobility as my grandfather had. And one part of that has to do with having a small business. And another part is the economic climate they grew up in.
Mm-hmm.
And then I would say to my generation, if you look across the average, a swath of, say, my high school class, the situation is, I think, much more difficult. Almost nobody that graduated high school and then just started working would be able to purchase a home right away and support a family ongoingly with one person working. That wasn't possible then. And I would say even now at your generation, for you to get out of high school, you're probably not going to get a job right away. Like you could go a vocational route.
I have a very, very good point. Sorry to cut you off.
No.
Very, very good point for this. My graduating class was around like 100-ish students. I think 5 went into the workforce. We had slides up and it would say where everyone was going. 3 were military, 5 were workforce, and the rest went into higher education. It's just so many of us don't think that we can make it right out of high school with a high school diploma. And I know a lot of people were able to in the past, but it's just not we can't even conceive going into anything outside of it. The vast majority, 95% of us went to college.
Mm-hmm.
And it's just crazy because there's no other way.
I think that's true, and especially there might be some edge cases, and I think we'll talk about that a lot here too, that we're going to talk about the generality most of the time, and there may be a few edge cases or specific examples that deviate from that, but for almost everyone some kind of higher education is required, which adds cost and time and shortens the amount of time that you're working, your working lifetime, kind of by necessity. But that makes the whole situation a little bit more difficult. And even then, if you get a degree, it's still unlikely that you'd be able to buy a home and raise a family as a single income earner. You will likely need both people to have degrees or small businesses or something in order to have enough income to buy a home, raise a family, and live a comfortable middle class life.
Either that or lots of debt or years of waiting to do that.
Drug sales, illegal activity, something has to subsidize this process. Yeah. It's just very different, and that's the point.
More towards the legal side,
Well, right, one way or the other. But the point being, it's just not the same as it was. We all know, I think everybody knows that they don't necessarily know the time frame in the U.S. when it was ideal, but we all know that in the past it was better. And
I think the main question for my generation is why.
Well, it's why, and I would sit with it for a moment that it's sad. It really is sad to think. I mean, one, it's sad that we're handing down a worse situation for our kids. That's one thing that's hard for me, is to think most parents and grandparents would think they would do anything to make a better situation for their kids. If that's the case, why are we why are we handing a situation where our government's in more debt than they've ever been before, where consumers are in more debt than they've ever been in before, and where our kids need to go to school longer and work harder to make less than the previous two generations? We have to do more. We have to get back on track. So we'll talk about why.
Yeah.
But I think everybody that's listening and watching would have the same feeling that ultimately the goal is to make it better. And so if something went wrong, which we know it has, we need to do something about that. We need to get back on track, not just for us, but for those that come after.
Exactly. And that's another thing, like, obviously I'm too young for this, but I want to have kids at some point, and I'm so scared to bring them into this because what if it's worse than what I'm dealing with? I don't want them to have to deal with that, and then I'm trying to work hard to create some form of generational wealth so they don't have to deal with like the immense amount of debt that you have to take on for like college and advanced, like upper forms of education.
Well, the good news is I think that the why is actually pretty simple. It's not as complicated. I think the hard part is how to change it.
Mm-hmm.
And I think that the biggest part with that is making sure that we all know why. Because there's a lot of, I think that the messaging that's out there, the wealth and the advertising and the messaging are intended to keep the status quo. They're intended to keep basically the wealth distribution concentrated at the top.
Makes sense.
Which makes sense. I mean, you can imagine, some of this I don't think of as, it's not evil outright.
Mm-hmm.
It's human nature. It's human nature that if you win the game economically, that you want to keep winning the game. You want to stay on top. It's scary to think that you might not stay on top. And so all of these systems that are put in place, it makes sense, but it's not helping the majority. It's helping that minority keep power and wealth. And I think that knowing that, we need to make some systematic changes to continue the path that we were on in the past.
Yeah, and I think calling it, like, to branch off of that, like, a little bit on it, not much of a side tangent, but, like, we call it the 1%. I'm almost 100% positive it is less than 1%. Like, the people that have the wealth are such a small group, and we should definitely try and distribute that into the more common people.
Yeah, it's the same shape all the way up. That's, I think, what's kind of interesting. If we look at the wealth concentration, and we'll get to that in more specifics in the future, but the shape of the wealth distribution is like this exponential curve up, and you'll see it at 10%, it looks exponential compared to the 90%. At 1%, it looks exponential compared to the 10. At 0.1%, it looks exponential compared to 1%.
Mm-hmm.
We just have this crazy rise, and I think we can talk a lot more about that, and trying to even visualize how much wealth there is and how concentrated it is hard, because it's continued to concentrate, as wealth will.
Yeah.
I think it's interesting because in a capitalistic society or a capitalistic economic structure, wealth will always concentrate. I think it moves towards higher and higher concentration, and we want aspects of capitalism. Like, we want some of those aspects to make our economy overall really strong, and it's great to have that overall strength. But we need to be very conscious about working on how do we still get the benefits of capitalism and the efficiencies that are incentivized. I think that's really the key. A big part of what we'll talk about are how do we align the incentives so that our system works the way that we want it to. And I think there are some incentives in capitalism in general that we really want, and those are incentives towards efficiency. But those same incentives incentivize wealth concentration at the top. And there are things we can do to put some guardrails on to make sure that it's still in the best interest of the whole society.
Yeah, I definitely did learn about how most economists agree that we need to live in a mixed society, like a mixed economical society, or else it's just not going to work. You can't have 100% capitalist just like you can't have 100% communist. Like, it's just, you need some balance, or else just all of the wealth is going to go to the top in a capitalist society.
Right. And that's, I think, the thing is, it doesn't, if we're saying like, well, what society do we want to live in? Or what do we want the wealth distribution? I think that's what we need to like take a step back and say, what do we want this system to look like? And if we can agree on that, and I think that, and we really need to have the majority agree. We don't need 100% agreement. We just need the majority to agree what we want it to look like. And then we can take some practical steps toward aligning the incentives so that it will work that way. And I think it's pretty clear, at least it's clear to me, that there are levers we can turn, there are things we can do to realign and change that distribution while maintaining the incentives. But we need to have a kind of a collective understanding and collective agreement that that's what we want.
And you think all of this can probably be changed through like a change in legislation, or?
I think there are a couple things, and we're moving quickly through a lot of different topics, but we can give maybe summary level now.
Yeah.
I do think the number one issue, in my mind at least, is the concentration of wealth. I think the reason it's the biggest issue, as it changes, as we have more and more of the wealth in a smaller fraction of the population, there's not, so maybe back up. If you, for the lower 50% of the population that are kind of struggling to get by, if they have an extra 20% more income, then in general they're going to consume more goods. They're going to maybe have a slightly larger house, they're going to have a slightly nicer car, they're going to go out to eat more often, they're going to have nicer clothes, they're going to consume more, which is actually really good for the economy.
Yeah.
Instead of that, if you take that 20% additional income from that group and you give it to, let's say, the top 1%, and by give it I mean it's just a set of policies in terms of that you tax the very wealthy less, or you do different things, you can kind of imagine this wealth would go in different places. That group of individuals, or the very, very wealthy individuals, there's not more consumption above a certain level. Like, you're not going to go out to eat more often. You can't go out to eat more than 3 times a day, every day.
Yeah.
There's some limit to the consumption, and there's not a limit to the amount of money. So I think there's a saturation point of money where any additional dollar you get is going to go into more investments, because there's nothing else that you can do, or at least that most people will do. They're not going to, like I said, eat out more. They're not going to get nicer clothes. You already have all of the things. You could buy an additional nice car to sit in your garage. There just is a level of wealth where every additional dollar is going to go into more investments.
Yeah.
And when you're at that point, there aren't a whole bunch of, the economy's only growing by, or the economy, you could say all of the stuff, all assets you could possibly buy, it's only growing by a couple percent every year. Maybe not more than 1%. So that's not growing by a lot. If your income is growing by 10% or 20% per year, and you're using all of that additional income to buy up assets, then you're buying up assets from the rest of the people. So
yeah.
The 1% is buying up assets from the lower 99%. The 10% are buying up assets from the lower 90%. So there are fewer and fewer assets. There are so few assets now that the bottom 50% of the population have approximately the same amount of assets as 2 or 3 individuals, like Elon Musk and Jeff Bezos. I think it may be just those two. It's the same wealth in 2 people as nearly 200 million people of the U.S.
That's insane.
That's insanity, right?
That is crazy. I didn't even know that.
It's crazy. And so what happens if Elon Musk and Jeff Bezos become more wealthy? If they get 20% more assets or more income for them, again, they just buy up more assets. So over time, it concentrates. And I think beyond that, if you can think of it as a whole, there are only so many assets that they can buy.
And there's none left.
Well, yeah, so they have to buy them from other people. And I think that's why you're seeing less homeownership. Small businesses are consumed by investment companies, which are owned by investors, and then they will either break them down or bring them into a larger, build it into a larger company. a consolidation of these assets. But as it gets closer to the top, you imagine all of these assets in a kind of a big thing. If the wealthy started off at like 20%, I think if you look back, again, I'm running off the numbers in my head, but if you look back at like 1980, somewhere between like the 50s and 1980, the wealthy, like the top 10%, owned about 30% of all the assets. Now they own like 45%, something like that. Meaning they've taken some assets from, or they've earned, or they've bought, assets from other groups, from groups with less assets. That's like a 15% difference. So the amount that is left as they buy them, there's fewer and fewer left to buy. What does that do? It drives asset prices up. So relative to workers, home prices are more expensive. They have less of the assets. Investors are buying up more of them through BlackRock Capital and other investment groups, but also businesses and stocks. All of those things. The dividend return on a stock is lower now than it was in the past because the price is higher. Because if you have more money and you just have to keep buying more and more assets with it, it's going to push all those prices up. I think you're seeing it across the board. And the point of this long monologue is that as there are fewer and fewer assets to buy up, you exponentially approach this point where they're consuming all of them and it's gone. Like there's no additional, they're all owned. And you approach it. At first it's slow, and then as you buy up the other assets and there's less and less to buy up, you buy them up even faster because now the other assets are generating income. And so you can get to this point where it's just not possible to own anything if you're not already a part of the ultra wealthy. And I think that's scary, and we should make sure we don't let it go too far. So we have to stabilize the wealth of the ultra wealthy. You'd say like at each level of the top 10%, of the top 1%. Right now it's been growing over time. If you look at the charts, and we'll pull those up, since about 1980, the percentage of the total wealth that like the top 10%, the top 1% have, has been growing relative to the wealth of the rest. If it continues to grow, we're headed towards 100%. If you get that, that means no wealth is owned by anybody else. So we have to change the trajectory. We have to stabilize. There is no other choice. And I think we need to collectively get to the point where there's this aha moment. Yes, everyone understands it is not sustainable to have all the wealth go to the ultra wealthy. We have to make some changes. And then what those look like, that can be a mix of things. There are multiple solutions that would fix the problem. Some things that are I think there's better solutions and there's worse solutions. I think there are some things that are going to better incentivize the end product that we want or the end state we want, and some things that won't. And we can talk about those differences. But ultimately, we have to understand that there's a problem, that we have to do something about it.
Mm-hmm. All right, I think that's pretty good, man.
I think we could wrap up for now. We didn't fully talk about the different dashboards of the economy piece so much, but that might be a good wrap up for now, and we can revisit stuff later.
The grand conclusion of this was definitely the distribution of wealth needs to be shifted, and I think that's a very good point. Like some form of fix. I think that's it. That's what we need.
Yeah, we need it to be stabilized. I think we need to, at some point, agree to what that is. I think the same way that we track inflation and aim for a certain level, we should be tracking the relative fraction of wealth of the total that, say, the top 10%, the top 1%, the top 0.1% have, how much they own, and we should be aiming to keep that in a stable position. That, like I said, the same way the Fed does with inflation, we need to do that with wealth, with the wealth distribution. And we need to have tools and levers that we're working with in order to make those adjustments.
You think just give like a small example, like tax hikes in certain areas, like owning assets in like, we'll say land, because land is a huge assets gained probably more than anything in the world. Like its value is increased more than anything, and owning land, like property, is like, yeah, there's taxation on it. It's not that like it's not that bad, and I don't know. I'm not an expert. Does it scale? Like, does it get more with you owning more land?
Does which part scale?
Like, the taxes. Do you have to pay like immensely more? So say like I own $2 million worth of land.
So property taxes would scale, but property taxes are state-based.
Okay.
So I think we're going to end up hitting several more topics and solutions, and that could be really big.
Yeah, I just want to give an example.
Yeah.
Like,
Well, and all I mean is that I love the discussion. I think we'll wrap this one up, and we'll just go right to starting the next.
all right.
All right, we'll see you here again soon.